Good morning. Thank you guys for joining. I'm going to go over the basics of life insurance, kind of the history of life insurance, the percentages of people that actually own life insurance, and I'm going to go over some different terms about life insurance so that our agents that are new know the basics of life insurance, and so that when they're using our fact finder, they feel confident asking clients and prospects questions about life insurance. So again, this is Cody with Secure Agent Mentor and SecureAgentMentor.com. I am going to go through over the basics of life insurance for all of our new agents or future agents or agents that want to be a part of Secure Agent Mentor. So we will go ahead and begin. The history of life insurance before we start is that it was first created back in 1706, which really surprised me, and they began selling it in the U.S. in the late 1700s. Actually, the Insurance Company of North America was the first general insurance company to sell life insurance, and that was in the U.S., started selling in 1794. So that gives you a little history about life insurance. Gosh, it's been around, for a very, very, very long time, a couple hundred years. Now this is one product that is I am passionate about, that I love, and it's all according to how we sell it. And so I'm going to go over the ways to. I'm not going to go over actually prospecting it, but we're going to go over the kind of the percentages of people that own it. So obviously, millions of Americans have no life insurance coverage. And only 61% of adult Americans have life insurance protection, which is a decline from 70% back in 1984. Only 41% of adult Americans have individual life insurance. Many rely on group insurance, leaving them vulnerable if they lose their job. If they leave their job, or if their life insurance coverage is not portable, or if they retire, then that leaves them uninsured, which is a scary thing. Most people who have insurance coverage don't have enough. If we think about it, the average life insurance need is about $459,000, which is 12 times the average income. But the average amount of, I would actually be shocked if that $459,000 isn't actually higher now. But the average amount of life insurance owned nowadays is $126,000. Therefore, the average person is underinsured by more than $300,000, which is a wild statistic to think about. Now, people who die prematurely with inadequate life insurance coverage create a financial burden on the surviving family. 45% of widows and 37% of widowers say their spouse was inadequately insured, which means they did not have enough coverage. 1 to 2 years after the death, half the widows and 1/3 of the widowers are just getting by financially. They're not able to live because they were underinsured, because they didn't have enough life insurance. They are just getting by because they did not have enough coverage to live the life that they were used to living. So we'll get into that a little later. On average, the individuals that receive life insurance proceeds receive about 3 times the household income from all their life insurance proceeds, while widowers receive 1 year of household income. There's not a lot of money nowadays. Nearly half the population seems inadequately prepared if the primary breadwinner were to die tomorrow. Because households are underinsured, there's not enough coverage to materially improve the finances of the deceased's household, which is, the plan is so that of life insurance is to not only, and it protects multiple different things, but it allows your family to continue the same life that they are used to living, and that is the goal of it. And if it's properly positioned, and if we do proper fact-finding, and we properly educate individuals, and we ask proper questions, we can actually properly insure people by adequately proposing what they need, so, which falls back on us as the insurance agent to know what to do. Some 13% would immediately have trouble meeting everyday life expenses, which is wild to think, but if you lose the primary breadwinner or the income earner of the house, you're losing a lot of income. So it's got to be replaced somehow. Another 25% would have difficulty keeping up with the expenses after several months. That's not very long at all. It's 2016. It's March the 29th of 2016, and it's flew by already. The whole year will be over before we know it. It takes years to recover economically from the death of a spouse. Widows and widowers indicate an average period of 4 to 5 years before their financial circumstances return to what they were at the time of their spouse's death. Whether they had to get a job, remarry, whatever the circumstances are, it took a long time to actually return to where they were financially. 2/3 of their spouses who do receive life insurance benefits receive less than 3 times the annual income of the deceased. I know we're beating that like a dead horse, but apparently it's a pretty serious statistic. Average amounts of coverage for those having life insurance is about 3 times their income. That's less than 4 to 5 years needed for recovery. Large numbers of Americans don't recognize their need for life insurance coverage. The last thing we think about is, hey, I need more life insurance. Well, despite evidence of being underinsured, only 29% of households feel they need more life insurance coverage. Even more affluent households, people that earn over $100,000 a year of income, lack sufficient life insurance, yet say they have sufficient coverage. Because they make a decent living, they think that they have enough money. Well, that doesn't always mean that that is the case. In the last 2 years, 11% of American households shopped for life insurance, but only 8% bought. About 890,000 households out of 111 million. So the need will always be there, and there's such a significant need and such a lack of market share that it's not hard to find people that need it. Life insurance agents are seen as the most useful source of information when buying life insurance because that's just what we do. We're supposed to be able to know how much they need and how to get it and where to get it and how much to pay. Agents are seen as more useful than the internet, books and magazines, or TV and radio programs, which is starting to surprise me nowadays because a lot of individuals do buy online or buy over the phone or buy on the internet or hear ads on the radio or commercials on TV. But they, believe it or not, they still feel like we are valuable and that we serve a purpose as a life insurance agent, which should make us feel good about our occupation. Of households that shop for life insurance, people that shop through any of the above scenarios, 45% never have had a needs analysis done to help them determine how much life insurance they actually and adequately need, which means we are poorly identifying the needs of others, and we, instead of being advisors and advising and asking questions and properly and adequately preparing proposals, we are simply becoming waiters and waitresses and taking orders. They say, I want $100,000 for 10 years, and I'd like to pay about $30 or $40 a month. Okay, it looks like we can help you with that. And so over half, 55% of the life insurance agents or advisors have become professional order takers instead of advisors and needs analysis individuals, which are a massive asset to what we do nowadays. And so we got to use those, and they see us as more valuable. They see us as more, there's more clout or more credibility when an agent actually professionally uses a needs analysis tool or a fact finder to find out how much coverage someone actually needs. It just boosts us up in their eyes. Consequently, 53% of shoppers say they have difficulty determining how much life insurance to buy. Well, they don't know the questions to ask. They don't know where to find how much they need. Yeah, there's places to find it, but that is where an actual agent comes in, because if we get to where everyone's just buying through the internet or over the TV or over the phone, then the people that are actually inadequately insured will drastically diminish in the years to come. There are whole life insurance versus term. There's 3 different types. We'll get into that a little later, but there's obviously whole life versus term life. We want to compare that, where Life begins, life ends, that's whole life. Then you've got college and work, things that happen, marriage or first home, mortgages, children, saving for college, peak earnings and asset accumulation, debt reduction, grandchildren, retirement and wealth transfer. That is term life, where we get into temporary needs of coverage. There are temporary needs and there are permanent needs. An overview of the market is that on the individual side is that 38 million uninsured working adults between the ages of 18 and 64, and there are 68 million U.S. citizens that have no life insurance coverage at all, probably because no one's asked them or told them why they needed it. There's also, on the work side of the market, in the year 2000, 68% of companies with 3 to 109 employees offered health benefits. In 2007, 58% of companies with 3 to 199 employees offered the same, 10% reduction. So the offering benefits appears to be reducing in the market. And then as far as retirees, the largest wealth transfer and taxation at its highest, concerned about the asset preservation. So that is going over the entire market, the coverage as a whole, the numbers behind life insurance, the numbers behind what people actually need, behind what people actually want. And so what is life insurance? This brings us to what is life insurance. Life insurance is a contract between an insured person and an insurance company where the company agrees to pay a sum of money to beneficiaries upon the insured's death. That's it. It is money that an insurance company has, where they sign a contract between an insured person and themselves, the insurance company. The insured pays a premium per month, per quarter, per 6 months, or per year to pay for a bucket of money or the sum of money that they will receive or their family and beneficiaries will receive when they pass away. Who is involved in a life insurance policy? The proposed insured is involved. Proposed insured is the individual that the life insurance is on, or the person that's covered with life insurance. There's also the policy owner, which sometimes can be the proposed insured. It's the person that actually owns the rights to the life insurance policy. There's another party that's involved is the beneficiary. Beneficiary is the party that will receive the funds or the proceeds from a life insurance policy upon the passing of the proposed insured. And then the fourth party is the insurance company. And the insurance company is the party that is signed, that is a part of the contract to pay the insured beneficiary upon their death, as long as the insured pays their premium when they are supposed to, keeps their side of the bargain and the contract up. Well, how is life insurance used? How life insurance is used in several different ways. It's used to transfer wealth upon death. It's used for estate planning. It's used for estate planning. You can get into taxation and covering the burden of taxes. It also covers. It's also used for mortgage protection. It's used to cover buy-sells. It's used to cover key person. For buy-sell, meaning the individual that they are able to buy out the other individual so that they don't have to be partners with their spouse, and their spouse receives a buyout with a lump sum of money in the form of life insurance. There's also key person. If a business is going to lose money because of the passing of a person that is very valuable to their business, there's a figure to that, and they can be that can be replaced to find and hire someone that they lost or to retrain. There's also income loss. The spouse loses income if the husband passes away, or vice versa, and that income needs to be replaced, and that's where income replacement comes in, and that's where how much of the income, how many years of income And then there's also burial, final expenses, cremation. Those are also other ways, other things to cover, and the ways that life insurance is used. Now, there's also three main types of life insurance. There's whole life, there's term, and there's UL. Whole life is permanent coverage. It's more expensive if you look at the price per thousand, and it's typically used for final expenses or smaller needs. But it's a coverage that is endows at age 100, and typically whole life plans, the prices never increase. They do build some cash value, so that is the whole life insurance. There's also term life. Term life is the most popular type because it's the least expensive. It is used to cover temporary risks like children or the mortgage, and so it's used to cover those temporary risks that are associated with our life, as we showed the graph here where it went over the whole life versus term life and the permanent versus temporary needs. It goes over all of those things where you can see those are temporary risks versus permanent risks. They are, you don't need it, maybe you don't need it your entire life. Maybe it's just to cover the mortgage so that it's paid off in the event of your passing. And so that is more term life, where it's typically for a term of 10 years, 15 years, 20 years, or 30 years, 20 years being the most popular. There's also universal life. This is the most complicated form of life insurance, or used to be, because it was tied to an interest rate, which would fund the policy for so many years. Well, now they have come out with guaranteed universal life, which can provide permanent. It's the lowest cost way to provide permanent coverage, and it's 100% guaranteed to last until whatever age we choose it to last. Then there's medical versus non-medical. Medical is less expensive. It is more difficult and takes longer because they check, not only do they check MIB and prescription drugs, but they'll check motor vehicle reports, they'll get a paramedical exam done, and they may even get an attending physician statement or medical records from a doctor. It's a more in-depth. The reason it's less expensive is because the insurance company knows more about you, and there's less risk for the insurance company because they've done all of their due diligence on the front end. Or there's non-medical. Non-medical is simpler. There is no physical. It's quicker and easier. It's a little more expensive because the insurance company knows less about you, but there's no paramedical exam. There's no one taking your blood, having you pee in a cup, or taking you with a needle to draw blood. How do paramedical exams work? Paramedical exams are necessary for fully underwritten coverage. The insurance company pays for it, and they can be done at the insured or the prospect or potential client's home, work, office, wherever they see fit, and wherever they would like that to be done. There is one last thing that I'm going to show on here. So for anyone that hasn't seen this, it is a very good thing to go to because when we're selling life insurance, we don't want to think of it as we're giving, as we're selling death in a way, because we're not. We're selling a legacy, and we're selling protection for their family. So I'm going to show this video real quick as we conclude our life insurance section.
We don't tell them, or when we do, we tell them wrong. We focus on the wrong parts. Like there's a story we like to tell ourselves about life. In the story, we will grow up, go to college, have a career, get married, have a family, grow old, and when, after a very long life, it is time to get our affairs in order, life will let us know. As if death will be so kind as to warn us. He will inform us, like when at the end of a trip, a text arrives, an alert to our phone that says, say your goodbyes, tend to your home, contact your lawyer, settle your affairs. We believe that story to be true until We are blindsided by heartbreak that seems so unfair. Beneath so much debt, it is a struggle just to get air. Everything was fine, and then out of nowhere, the phone rings. A siren wails. We crash straight into a doctor's chair. As the hair on our neck stands up, we stand up unprepared as she pulls the air from our lungs so we can't speak. We listen as she says the words, critical condition, terminal, hit and run. It's in his lungs. You are dying, and there is nothing to be done. And when we tell the story of life insurance, that's the story we tell. We focus on death, the tragedy, the sadness, but that's telling it wrong. And I'm not saying there is pain or heartache, sacrifice. Of course there is. That's life. I mean, those things happen for the same reasons tooth fairies and sunsets and great wine and grandchildren happen. And that's life. It's not that the tragedy isn't there. It's that it isn't all that's there. And there's so much more. I mean, in all this hopelessness, hope is. But to see it, we have to shift our focus. Like standing in the middle of a burnt-out forest, only we don't notice. Instead, we are drawn to where a perfect blue crocus lifts up its head to remind us that on the most tragic days, after we are dead and gone, life will find a way to go on. And sometimes what happens in a moment stays with us for years, and yet the living must lift ahead. Persevere. That is why at some point in the middle of all those tears, a laugh, your memory finds its way out. And when it is needed most, a check appears with a memo line that may as well read, despite the fact that my body is no longer here, I still am. My love lives. Even though I don't, my presence will be present. Even though my body won't, as sure as death is part of life, life is also part of death. So when your last exhale will wait no more, your loved ones will pick it up from the bottom of your lungs, place it lovingly onto their own, and complete your breath. The heart can stop beating, even as it refuses to. The body can stand tall, even as it is laid to rest. But it will. Only if you choose to ensure that a check will check on them on your behalf for years after you've left, because the answer is no. When the question is, are you interested in preparing for your death? But when the question is, do you want to take care of your family? The answer is always yes. If you ask my dad about dying, he will tell you he doesn't worry about his final resting place. He worries about my mother and paying the mortgage so she will finally have a place to rest without worry. My friend told me he had one thought as his son raced to the hospital at 3 in the morning with him in the back seat struggling to breathe. He thought, what will happen to my son if I die? I mean, that's life. He told me later. He said, that's how it works. Real love means it happens to you both. We don't buy car insurance for when we get hit. We buy it for when we hit someone. We don't buy life insurance for when we die. We buy it for when they don't. We buy it because when we love someone, we want to protect them from any added despair, any hardships that can be spared, to experience the happiest moments, even when we won't be able to experience them beside them. And it gives us comfort to know if we aren't able to have those moments, we can provide them. I mean, moments like walking down the aisle, right? As the first grandchild born, moving into your new dorm, eating together as a family, hanging pictures on the wall of your first home. And all of those moments, Dad is here, Mom is with us, even lived. It is because of Susan this was possible. In all of those moments, we are none of us alone. This is not about memories, but what our lives are able to become. This is about understanding that when you love someone, you do whatever you can to help them, to hold them, to enfold them in the truth of this immutable fact. Life insurance is the final loving act of a person who at the end didn't see flashes of his own life. Instead, he saw the future he wanted for his parents, his kids, his wife, and he knew that if their pain could somehow be lessened, their load perpetually lightened, that perhaps their grief would be less sharp than it might have been. And by preparing for what might be, despite being frightened, it's like taking your loved one softly by the wrist, holding out the life insurance as a gift and saying, This is for all the flowers I would have bought, These are pennies for all of our children's thoughts, the mortgage for the house we finally got. I don't know if it's enough, babe, but it's a lot. Please use it to make the life we dreamed about exist. And if our kids ever wonder if I love them, you give them each a kiss while clenching this life insurance policy in your fist, and you tell them there is no doubt he loved us. He did this.
That always gives me some goosebumps. I wanted to play that to close out our basics of life insurance and Life Insurance 101, just to make you think that when we're selling life insurance, we're not selling death. We're selling love. We're selling family, and we're selling, like you said, we're selling it for when the family doesn't die and someone else does. So, if you need me, please reach out. Please ask questions. Again, this is just basics of life insurance. You can listen or watch it on Secure Agent Mentor and very soon on secureagentmentor.com. Again, if you have any questions, please reach out. Thanks for joining, and we will talk to you soon. Have a great week. Goodbye.